Hi, everyone. My name is Clara Femia. I am the Managing Director at Optimize Hire. Optimize Hire is a company in Raleigh, North Carolina, and we help companies with their hiring processes generally. But the last 2 weeks, we've been a lot more focused on the CARES Act and how that can help companies retain their talent. So we've been studying and creating webinars for a lot of our clients over the last couple weeks. But today on April 7th, we are creating a webinar that's as updated as possible with all the different changes over the last few days to how the CARES Act has been actually implemented. And we wanted to make sure that we created something for not just our clients, but our family and our friends and your family and friends who might be able to benefit from this as small business owners. So I'm going to introduce really quickly Dr. Nick Lobuglio. He of the Wharton School at the University of Pennsylvania. He is our Director of Research here at Optimize Hire, and he is going to lead our webinar today about the CARES Act. So Nick, I'll let you take it away.
Thank you, Clara. I'm going to see if I can get this video to work just because I like for people at least to see me a little bit. Hi, so I'm Nick. I live in Philadelphia. I work with Optimize over the last couple of weeks just because of how fast things have been changing. I've sort of been studying the CARES Act as it was proposed and then signed not even 2 weeks ago, by the president. And now, as almost every day, things are changing about how small businesses can go about getting access to all this money that has been set aside to try to get us through this this period of crisis for our country. So hopefully in about 45 minutes or less, I can walk you through, if you are a small business owner, the major provisions that apply to you immediately, what kind of money is available to you, how you go about applying for it, what's going to be forgiven versus not forgiven, depending on what happens with your business for the next couple of months. And hopefully we can get through all of that in the next 45 minutes. So I'm just going to go to the slides now. Okay, so the CARES Act is the name that Congress passed. It stands for Corona something something. But then these two programs you're going to become very, very familiar with if you're a small business owner right now in America. Two different programs that you immediately now have access to, and that when we were doing our webinars last week, that was not true at the beginning of the week for either of these programs. By Friday, sort of both of them, and by today, Tuesday, April 7th, both are pretty much up and running in some form. But that's part of what we're going to be spending our time talking about is how it's running right now, and then things will hopefully improve in terms of how streamlined they are. So we're just going to cover the major provisions of what was in there, what these two programs are, how you go about applying to them. The goal here is to help you just understand what is available, help you understand what kind of materials you need, how to gather them, that you're going to then take to your bank or to the SBA when you are applying for these loans. I have to give this qualifier that I am not a CPA or an attorney, but you as a small business owner, these programs are intentionally set up that you don't need to have a CPA or an attorney in order to apply for them. Congress made a very, very concerted effort to include as part of the legislation the requirement that the processes for applying these are streamlined enough that if you are just a small business owner operating anywhere in America and you've been impacted by this major health crisis where we are, many states are prohibiting you from operating your business, the goal here is that you would, with the materials you already have, be able to apply. Of course, it is still probably in your interest if you work with an accountant regularly, if you work with an attorney on how you pay people and file things, it's still in your interest to seek those people's professional help. They are certainly going to be very busy. They are very busy right now. The banks are very busy. Everyone's really busy. So the goal here is not for this to subsume any of their expertise, but rather just to give you a starting point so that when you go talk to these various stakeholders, your bank, your accountant, your payroll processor, you will already know what the programs are, you'll know the basic skeleton of how they work, and then you can put in the specifics for your own business, and the process hopefully will move much more smoothly for you given that, rather than if you just call your accountant right now and say, hey, tell me about the Paycheck Protection Program. Hopefully I can get through that part, and then your accountant who knows your business can help you with the actual specifics. how that's going to work. So we're not going to spend a ton of time going over most of these things, but I sort of want to just like briefly overview, because this was still only a week and a half ago that the House, after a couple days of agreement or negotiating, passed a version based on what the Senate had passed, and then President Trump signed it the same day, and that was only March 27th. And many of these programs only sort of became available. The biggest program for you as a small business owner only became available on Friday. So you're not really behind the curve. Many people in America, I think, still don't really know the specifics of any of these things. So just learning today, you're still in good shape. The applications are coming online. The application periods will be open for some period of time, but now is the time, as we all have some changes in our priorities, with time to hopefully use some of this money that's made available by the government to get your business through this difficult period and starting up faster once we reopen the country, God willing. So these two programs, we will spend the vast majority of the rest of our time talking about them. So the basic structure is just there are these large loans built around these disaster loan programs that the Small Business Administration has been loaning to people when a tornado comes through your town for many decades. There's a new feature to these. A big new feature is just that you can apply for them during this period of economic injury, over just like you've lost your customers or you're not allowed to operate. Normally, you would not be able to apply just because economic times are bad. Part of them, there's a $10,000 emergency grant that you should receive immediately or within 36 hours of applying. These are fairly complicated applications. It still very much could be worth your time and your effort to apply. You can apply for up to $2 million, and you are applying directly through a web portal to the Small Business Administration. Paycheck Protection Program is the new one, like the new thing that is using an existing SBA structure, but is very new in terms of how you go about applying, where you go to apply for it, and then how you'll get a loan now, but you could have the loan forgiven in July if you use it to continue to pay your employees and maintain your staffing levels. That's why it's called the Paycheck Protection Program. This one, more than anything else, specifically designed to help you as a business keep your staff employed, so that you can, one, they don't have to apply for unemployment. You don't lose these people to other opportunities where then you lost critical knowledge in your business. And two, as soon as we are over the worst period of the current shutdowns, that you'll be able to start up right up again instead of all your employees having left. There are some other things in here that we're not going to cover much in this call, but I would encourage you to investigate if they seem like they might be applicable. Pretty much every business is eligible for certain kinds of payroll tax credits if you maintain staffing levels, and there are all sorts of loans in place for big businesses. But this is the purvey of real professional CPAs working at your company or for your company when you're going to apply for those. These are the two programs that have been set up for any small business member owner in America to have a good shot at getting through the paperwork and applying for these loans. These you've probably heard about in the news. We're not going to spend any time on them on this call, but every person who's filed taxes is going to be eligible for these sort of one-time stimulus payments, by family, different sizes, direct deposited if possible, if you filed your taxes, or if you qualify, and there are a couple other ways, even if you haven't been required to file taxes. There are expanded unemployment benefits. This is a big thing for anybody in your life who is, unfortunately already unemployed. It is, there's a lot more money available. The federal government is making it easier to apply, requiring that the states make it easier to apply and that more people are eligible. And these notably, you apply through the individual state. So again, like, where are you getting these different sources of money from? You apply to the SBA for this one, you apply to your local bank for this one. This one, you are applying to a state unemployment office, depending on whatever state you live in. And then the other thing that's just in the CARES Act that's historically relevant for us is just that the federal government is also providing lots of special assistance for the states to continue maintaining programs, and for the healthcare industry to make sure that they have the resources they need to get through this crisis period. So the PPP is the bigger one for, I think, most of the people who will listen to this call, but we're still going to actually cover first, just very briefly, these EIDLs, because you can apply for both. I'll discuss why you might or might not. So the EIDLs have been around for a long time. These disaster loans have been around for a long time. It's easier to apply for them when your governor or the president, declares disaster designations. That's why you hear it making news. Just if a governor declares a disaster, if you have a business that is in these disaster designated areas, you've always been able to go to the SBA and apply for these loans. So that's not new. What's new is just a vast expansion of who qualifies, what qualifies, and how the loan is going to be approved and then granted to you. That is all different as a function of the CARES Act. But they're using this existing structure through the Small Business Administration that has always existed, and they have these tons and tons of professional staffers at the SBA whose job has always been to review and grant these applications. They're just now, in the period of March and April of 2020, they're dealing with way, way more small businesses that have economic injury than we've ever dealt with in the past. These loans can vary in how much you apply for, how much you need, up to $2 million. They have pretty low fixed interest, for-profit 3.75. They have long repayment periods, up to 30 years. That can be, that's part of getting the loan, is how long of a repayment period you want. They do not have penalties to originate them or to pay them back. So if you get one and you end up not using it, and that money just sits in your checking account, you shouldn't be losing any money, because you are not going to have to pay for 12 months on the loan. And if you just give all that money back, you make it through the dark times, you pay the money back, you shouldn't have had to pay anything. This is the other portion that's very big and very new, is this $10,000 emergency grants. And I think we're all going to hear a lot about these in the coming weeks and months, because typically when you applied to an SBA disaster loan, you would have someone assigned to your loan. They would consider all sorts of different documents that you would have to submit. They would probably ask follow-up questions. Sometimes they would come and come to your place of business in person before deciding to grant them. All of that is mostly going to be streamlined, but also just for filling out the application, you're supposed to get, as part of the CARES Act, a $10,000 emergency grant. So if you just apply saying, this is why I need this money in order to get my business through this disaster time, you're supposed to get $10,000 within 36 hours. The SBA has been saying that they're able to meet this now. As of April 7th, I have not talked to any small business owners who have gotten one deposited to their account, but that seems to be that if it's not happening already, it's going to be happening very soon. That if you submit the application, you will get this $10,000 grant, and it is not going to have to be repaid, even if they end up denying your application. So that's obviously quite notable. Depending on the size of your business, that might be a huge and meaningful amount of money, or it might just be kind of a small, helpful amount of money, but nothing that will get your business through the end of June. So that's why the PPP loan is bigger and why we're going to spend more time covering that. You can apply to both, but they kind of both explicitly say that you shouldn't be using the funds for the exact same thing. It's sort of like that's something to work with on an accountant. Some of it will be clear just at the end of this, but if you're going to apply to both, it's probably in your best interest to work with an accounting professional to figure out exactly what money is going where and how you can sort of best maximize obtaining both loans. This is important for both types of loans. Generally, if you have fewer than 500 employees and you own the business, or you and a very describable group of partners own the business, you're going to qualify for these small business loans. You also qualify as a sole proprietor, with or without employees, or if you are an independent contractor. This is all new. These things have not typically been, you've not been able to apply if you were not, part of a business with employees. There are very, very clear exceptions where you might even have more than 500 employees and you can apply. If you have more than 500 and you want to apply, there's lots of resources by industry for you to figure that out. They are also, accepting these applications from 501 nonprofits. There are exclusions if you are currently involved in certain criminal activities, working in prohibited industries. We won't spend a lot of time on that, but there are some precluding things. If you're involved in certain kinds of criminal proceedings, you are still able to get these even if you did some bad things in your youth that are still on your record. they put limits on different kinds of crimes and how many years to be eligible. But basically 500 or fewer, you got a good shot. So these programs, throughout the rest of this webinar, I'm just going to go and show you exactly what it looks like if you're a small business owner, even if you have 1, 2, 5 employees, whatever, what it would look like if you want to start applying for these programs. So this is new. It just came out last week, this new sort of COVID-19 related economic injury disaster loan application. It's all streamlined. They ask you, to show which of these things makes you qualified. They ask you, to say that you're not involved in any of these bad things. And then you're going to have to fill out a ton of information about your business, about who owns it, because they're concerned about, they're not concerned you're doing it, but they just need to make sure that whoever is taking out the loan represents the business owners and that they're not applying for multiple loans through, multiple entities. And then you'll have to fill in a bunch of information. The SBA says that it takes over 2 hours to fill out this application. I think if you had all of your paperwork completely and totally flawlessly available to your on your hard drive, you might be able to fill this out faster, or it might take you longer. I have one important piece of advice based on how people have been responding to this. It takes a long time to fill this out. It's obviously can still be worth it, even if you're just getting the $10,000. And if you're getting $1 million to get your business through this period, certainly worth the time to apply for this. The system has been really strange. They keep making announcements that they have fixed it, but people go in and they fill all this out. They fill out information where they're typing directly into the program. They click the next button and they get timed out of the system. It's happened a lot. The SBA keeps saying they fixed it, but if I were you and filling out this application for 2 hours, I would just make sure that everything going into the forms is coming from some document that is on your hard drive. I believe once you get into it, there is an option to just download the forms, fill them out on your computer, and then upload them at the end. However you can do that, I just would strongly caution you against typing directly into the forms online because people have had problems with that over the last 2 weeks. And in general, we'll move on to the PPP now because there are a lot of resources out there to help you apply for these disaster loans, the EIDLs, where people will walk you through the application because these have been around for a while. So if you're ready to apply for one and the application seems daunting once you get into it, I would definitely recommend going to some of those resources. Just with Google, you can find them pretty quickly. Okay, so the big one, the thing that is making news every day in the business press, increasingly being picked up everywhere, this program was sort of created almost from scratch to address this specific challenge that we have in our country right now, which is from about mid-February when the stock market started going down to about June 30th, hopefully. This program was created to try to help you maintain the employees that you have without having to fire them, furlough them, or otherwise disrupt your business, even if you don't have work for them to do. Basically, what the federal government is saying here is that if you continue to employ them and you pay them, the federal government is going to give you a loan where you can use that money to keep paying them. And then as long as you do that through June 30th, you get the loan sometime now. It's obviously after February 15th, but you get that loan sometime now. You keep employing them through June 30th for 8 weeks, and the federal government is going to forgive the loan. So it's going to end up being like a grant, but it's only going to be a grant if you keep your employees. If you don't keep your employees, then they're going to decrease the amount of forgiveness on the loan so that maybe some of it is a grant, but some of it is a loan. And that is going to be a calculation that we'll talk about now that is going to happen in July to see if you basically kept the employees that you were hoping to keep. This is still folded into this program that's existed through the SBA for many, many years called the Series 7A loan program. So when you're learning more about this, when you're studying it, you're going to see this term come up sometimes. So I feel like it's necessary to use it because this 7A loans are going to come up related to this. Unlike the EIDLs, because the EIDLs are being administered by the SBA still, the PPP is being overseen by the SBA. The SBA is, still involved in all of this process for the PPPs, but they are being administered by local banks. The idea here is that the SBA only has so many staff members, and there's millions of businesses in America, and there are thousands of banks and thousands of loan professionals working at those banks. So by administering this program through the banks rather than through the SBA staff members itself, the hope is that the federal government can get more of this money to you more quickly through existing relationships than if they were to just open a completely new program. This number is how much 349 billion was allocated for this. You'll see at the end, this just, 9 days ago, 10 days ago, this was the number that was set. Everyone is fairly convinced that this number will not be enough to meet the demand for these PPP loans in the coming months. And many, many politicians have basically already come out guaranteeing that they are going to increase this funding to whatever the number needs to be to get us through this period when we sort of safely reopen the economy. Similar to the EIDLs, you're generally going to have fewer than 500 employees. There can be exceptions, and you will have to, not be involved in certain bad things in order to get these. So it's the Paycheck Protection Plan, and you are going to be asked, what are your payroll costs for your business? That is sort of the underlying logic of this is, what is your payroll? What does it cost for you to, as a small business owner, to pay your employees under normal times and now under these distressed times? So you are going to be calculating basically what you're paying people up to 100,000. If you're paying people explicitly more than 100,000, it's just going to get capped at that number. That basically that's the amount the government is going to lend you. Obviously, you can still keep those employees. It's just that the government is only going to lend you and forgive up to the first 100,000. But things like this are included. Health benefits that you're paying are included in you as a business owner. You're paying your employee a salary, but then you're also paying for, the health benefits and the retirement benefits for them. Those are going to get added on top of this. And then things that you pay for state and local taxes for your employees are also going to get lumped on top of this. Federal taxes are not going to be included. And this, has gone back and forth over the last week and a half on exactly what and when federal taxes will or will not be included. Basically, if you withhold things, the things that your employees are technically paying, like the FICA taxes and the income taxes, those are included. Like it's basically, what are you paying your employees, even if you're withholding them through your payroll provider. But the portion of the FICA taxes that you are paying directly to the federal government, not on behalf of your employees, but just you yourself, those will not be included. And that's because this whole program is still being structured as basically a tax credit that you're getting paid ahead of time. So the federal taxes are not going to count for that because of the tax credit structure of the program. This is super important, and it is something that if you write because the language in the CARES Act itself that the president signed was somewhat ambiguous, early reporting and guidance on these PPP loans often thought that you were going to be including your 1099 contractors in your loan amount. That has since been clarified multiple times now by the Treasury Department that anybody who is a 1099 contractor or like a vendor of any kind, sole proprietor that you're paying, you should not be including those because they are fully entitled to apply themselves for all the lost business that they've had because of this disaster. So what they want to avoid double dipping, to avoid where we're counting and that sort of thing, and keeping it straighter for the banks, is they want all those individual contractors to basically apply for their own loan to cover their own income.
Hey, Nick, I have a question. Do you mind if I jump in? Just a clarification on when you say that 1099 contractors should apply for loans themselves. Does that mean if I'm a 1099 contractor, I act as a small business applying for a payroll protection plan loan, or do I want to go elsewhere?
Nope. The way that this is structured, and this would not have been the case pre the CARES Act, but it is structured so that even if you have no employees, maybe you just work for like 3 different companies and get a 1099 from all 3 of them, and every year you do your taxes and you put all 3 of those 1099s on there. You are the sole owner of that small business. It doesn't matter if you don't have an LLC or if you haven't like structured it yourself as a single corporation or anything like that. just you as a taxpayer with your social security number as your tax ID number, you can file for a PPP loan through a bank. That is not happening yet. That is not supposed to happen until a minimum April 10th, this Friday. We will see if the banks are actually ready by April 10th to take these things. But the current guidance from the SBA is that 1099 contractors, sole proprietors can start applying April 10th for their own PPP loans, basically. Thank you. We've had a lot of questions for everybody listening on that over time. So unfortunately, when it first came out, it was not clear, and many people thought 1099s were not going to be included, but that has been clarified now several times. So thank you, Clara, for making sure we clarified that for everybody. Okay, so this is like, how are we coming to the amount that you're asking for? Because, you know, for the PPP loans, you're not just picking a number, you're picking a number based on a very specific formula. And that formula is going to be important for how much money you're asking for and how much money you're getting forgiven. So how much basically becomes a grant in the future. So again, because the whole idea of this program is for you to maintain through the dark times the same amount of employees that you had in the good times, you are being asked to calculate your average monthly payroll costs. So all the things we talked about just here. What is your average cost in a month for those things? The legislation is written to say over the last 12 months. That is a little bit unclear to some people whether that means, can we just say each month of 2019, or is that mean up to some period in March of 2020, because different states had different times when businesses were basically told by the governors to shut down. So does that mean we're supposed to do it until the day before your governorship? That was not clear in the legislation where governor told you to shut down. What seems to be coming out now this week from the banks is that you work this out with your individual bank, whether they want to see, let's say, your February, March 2020 payroll, or whether they're okay with seeing just your 2019 payroll. This is certainly something your accountant can help you with too, because if you started laying off people at the end of March, then you don't really want to include that for your average monthly payroll. You want it to be basically before things got bad as a result of this corona epidemic. You want your average monthly payroll calculation for that. You're going to take that number, your average monthly payroll, multiply it by 2.5 times, because it's like a 10-week is like the hope that we can get you through 10 weeks, like the federal government can get you through 10 weeks. And then you're going to get a dollar number. And this is going to be the loan amount that you're asking for from your bank, and that your bank is then going to, subject to their review, ask the SBA for on your behalf. There are some provisions that if you're a new business, like you just came into business, so your last 12 months doesn't make sense, you are allowed to explicitly just use January 1 to February 29 of this year. And then seasonal businesses, because there's all sorts of businesses in America that do a lot more work in the spring and summer than they do in the fall, winter, whatever, you are allowed to use this sort of same coronavirus period of February 2019 to June of 2019. And basically say, that's the period that we're focused on for 2020. So instead of using average monthly payroll for 12 months, you can just use this period right here because of your seasonal employees. These loan terms are more specified than the EIDLs, which can vary on these things. You can ask for up to 10 million. So you can ask for more than you can for an EIDL for this PPP. It's only a 2-year repayment term. This is something that has changed because it was Treasury that decided this, not the legislation itself. So the current rates, these are almost certainly going to be final, and what you will actually get your loan from is going to be 2-year repayment. Interest is only 1%, so very, very, very low interest, and you don't have to pay for 6 months. So if you get your loan in April, you're not going to have to start making payments on it until September, and it might be forgiven by then. So you may never make any payments on it. You're not paying fees. The banks cannot charge you additional fees for making these. The banks who are doing the lending are going to get a certain amount as a percentage of your loan added on to what they'll receive that they get to keep. So you're going to get what you ask for from the SBA, but then the bank will get some money on top of that. And that's the incentive for the bank to work with you, not only to keep you in business because they're here to serve you, but also because they do stand to make some money from this by giving out these loans. Like with the EIDLs, if you get the money and you don't need it, you are perfectly entitled to pay it right back and not before the end of the term, and not be charged any additional fees. And then collateral and personal guarantees are not required for these loans. Okay, so there's a couple things we still want to cover. You've asked for a certain amount. I want to get to this now, even though it's not actually going to matter until July, but because this is incredibly important for any small business owner deciding whether to do this, because many people just don't want to take on more debt, even if things are bad right now. The idea of these loans is that they're structured as a loan in order to make sure that you keep your employees. If you don't keep your employees, then it's a loan. But if you keep your employees and use the loan money to pay the employees, it sort of becomes a grant through this process of forgiveness. So we're going to go over just the basics of this, though between now and July, I think a lot of people more qualified than me are going to be working on this and figuring out exactly how all this will work paperwork-wise, and your bank will be figuring that out in order to get the loan forgiven. But the basic idea is that in July, this is all coming from the legislation and from what Treasury has and the SBA have announced over the last week. The basic idea is that in July, you are going to look at how many employees you had in this period, this focal period, February 15 to June 30 of 2019, last year. And then you're going to look at how many you had this year. And that is going to be a fraction of how many you had last year, how many you had this year. And if this year you have more or the same number of employees as you did during that period last year, then your loan is going to be forgiven 100%. If you have fewer, then it's going to decrease proportionally to your average monthly full-time equivalents during that period. So full-time equivalents is an accounting term, an HR term for how we account for when you have multiple part-time employees. They add up to full-time employees in terms of hours working for your business. And that's why the legislation, that's why Congress chose to use these full-time equivalents rather than just raw numbers of employees to do this calculation, because they want you to keep your part-time employees. Even if you have a bunch of part-time employees right now, they don't want you to get rid of them. And they don't want to game the system by allowing you to just mess with their hours and say, well, you hired twice as many people. If you reduced all their hours, then you have not hired twice as many people. So the whole reason for these FTE calculations is to basically try to keep the same thing in place that you had. This is something that you can work with any accountant on calculating the FTEs, and even there's lots of resources, because this mattered way before the PPP. There's lots of resources online to help you understand what are the FTEs. But basically, if you have a full-time employee, they're one FTE. It's all the part-time people and seasonal people who this is going to get more complicated for. And then again, there's the stipulation. Yep, go ahead.
Oh, all right, quick question for you. So knowing how the loan forgiveness is going to be calculated, is it still in my best interest if I'm a small business to calculate the loan amount from just the calendar year of 2019 if I've already laid off some employees between the beginning of 2020 and now?
Yeah.
Or is it maybe smarter to use the number like between maybe February to February, in order to like have a more accurate perception so that I can be the loan can be forgiven?
That's a really important question, and it is going to, I think, depend a little bit on your bank and what they want to see, because basically what you're asking is up to the banks to determine to some degree what they want. So I think plenty of banks would accept if you give them a loan application and your payroll numbers from February to February, they would be happy to accept that and process your loan. Other banks maybe want to see your 2019 full information. Other banks, maybe if you just have 2019 and you don't give them any payroll information from January, February, it would be up to them to say, well, we want to see January, February too. So you're right that depending on when you start laying off people, if you have laid off people already as part of this, that could change. And I think that's where you sort of need the help of a professional accountant, and you can work directly with the banker, right? Because every banker is going to be motivated to help keep you in business because they want to help you and they want to help you get this loan. So to the extent that you need to work with the bank that's taking your loan to figure out what numbers are, that's good. There is this sort of stipulation that's here that is in the legislation that I have yet to see super clear guidance from anybody, including the SBA, including Treasury, and any particular bank, on exactly how this is going to work. That basically, if you reduce salary by more than 25%, you can you're going to lose some of your loan forgiveness. And you have until June 30th to restore your full-time employment and salary levels for changes during this period, right? So they're hoping that by April 26th, you will know if you're getting a PPP loan or not. That's like the goal. And they're saying that you can now hire those people back and get your FTE numbers back by June 30th to the numbers that they were, and keep those people for, I think it's an 8-week period, and then still get your loan forgiven. But frankly, that is something that we're going to have to maybe do another update on and figure out exactly how individual banks are enforcing this thing of, like, you know, today is April 7th. I laid off 3/4 of my employees on March 23rd because my governor shut down our economy. I'm going to get a PPP loan. You're going to do it definitely based on numbers from before you had to lay off all those employees. You get the PPP loan, it's approved by the SBA, you're working with your bank. There's going to be a period where you are allowed to rehire everybody before June 30th and get your loan forgiven. Exactly how that will work is a little bit TBD as of right now, April 7th. Okay, so that's all super important. Thank you, Claire, for the question. This was not in the original legislation, but it is definitely important for you all to hear as you're thinking about applying for one of these loans. They basically said in the initial legislation that you could use the loan money for things like mortgage, rent, and interest on debt obligations that were that you had taken on before February 15, 2020. So that was the initial guidance, or that was the initial language of the CARES Act. The Treasury Department, in using their power to interpret exactly how to implement this, is worried that there's going to be so many people applying for these, and we're going to need so much money for these programs, that they're worried that they just can't go around giving out all this money to pay off mortgage rent indefinitely for every company. So their current guidance, and this is not going to change, but this is what you're getting the loan with, is basically saying you're calculating the amount of your loan request based on average monthly payroll. You then will get this pile of money and you can use it for these things, but which are not payroll costs, mortgage and rent are not payroll costs. But if you use more than 25% of your loan for non-payroll costs, they're probably not going to forgive that part. So the basic rule is just 75% and 25%. If you use 75% for payroll and 25% for mortgage, rent, and interest on debt, that's fine. Your loan is totally forgiven. As soon as you go over that 75 number of not using that portion for payroll, let's say you only use half of the money for payroll and half of it you use for these things, then that's gonna affect your loan forgiveness amount. So in general, if you can use 75% or more for payroll, it's going to be better for you and easier in getting the forgiveness calculation done in July. This is important because you are entitled to apply for both. The loans say that you shouldn't use them for the exact same thing. So if you get an EIDL and you get a PPP loan and you get both of them in April, you shouldn't be using the money from both loans to pay for your payroll in April, May, and June. Like, you almost certainly want to use this PPP loan for just what it is set up for, which is payroll for April, May, and June, and use the EIDL if you get one for other business expenses and for potentially, expenses beyond June 30th. You can use that money for anything after that, including payroll after the 30th, after June 30th. So don't spend your EIDL money on the exact same thing that you're applying for this PPP loan for, even though you can apply for both. And then this is important, this $10,000 grant that we talked about that you get even if you get denied. If you get this $10,000 grant while you're waiting on your PPP application, that's fine. The money is going to go to your checking account through your bank, but that $10,000 is from the grant is going to come out of your forgiveness. So if you get a $20,000 PPP loan, only $10,000 is going to get forgiven because this $10,000 grant is going to be basically like that money elsewhere. So you shouldn't lose any money on this transaction, but it is going to affect the forgiveness calculation in the future. We don't need to spend a lot of time on this, but basically when you apply to the PPP loan through a bank, you are going to certify all these things that you're doing, that you need this because of the coronavirus, that you are using it to retain your workers, that you're not going to try to defraud the government by applying for multiple PPPs through multiple banks, and then you're going to work with your bank to sort of certify everything. Submit the same documents you submit. It is definitely, this is, truly as close as we're ever going to get to free money from the government to pay our employees, as long as you, do everything truthfully and accurately as possible. Okay, I'm going to just do a couple of quick examples. Many things could complicate this, but I just sort of want the basic idea, right? Imagine you're a company, because of your tax forms that you paid $300,000 in 2019. So you had 5 full-time employees and 2 part-time employees, each working 20 hours per week for the whole year. So obviously this is an easier calculation than many of you will have, but with some spreadsheets, you can get to it with your FTEs and part-time employees. But like when it's this quick, you just know you had 6 FTEs, during this critical period. But here's all you're doing. You're just taking the cost. How much did you have then? Divide by 12, and you get to $25,000, right? So that's your per month, your average payroll costs, total cost, payroll's 12, multiplied by 2.5. This is how much money you're going to put at the top of your PPP loan request form that you're submitting to your bank and to the SBA. This is how much you're asking for. This is how much payroll, divide by 12, 25, times 2.5. That's how much you should be asking for, backed up by all the payroll documentation that you have. In July of 2020, it's going to vary by bank exactly what they want to come with this, but this is how much you're going to ask for. In July of 2020, this is how loan forgiveness is going to work, figured out by the banks. July of 2020, you're going to submit your payroll documentation to show how many FTEs you had working for you during this period in 2020. And we're going to compare it to 2019. Let's say you just had 6 full-time employees, no part-time employees this round. In 2020, you just had 6 full-time employees. We've got the same number of FTEs. It's just, 6 divided by 6. You paid it for your payroll. These are the numbers you would be entitled to use. 25% of that for your, let's say your rent, for your garage, for your business or whatever. You could use up to that amount and still have it forgiven, but you maintained your FTEs. You used it no more than 25% of it on non-payroll expenses. The loan is at 100% forgiven. So you get this much money in April, and in July, your bank certifies to the SBA that you're not going to owe any of that money back. We'll compare just like one potential. There are many ways you could get that number reduced, including reducing salaries of your employees too much, using it for non-payroll expenses more than 25%, or having fewer employees. The government doesn't not want you to apply for this loan. Even if you get this loan, you're going to have to reduce your number of employees. Like, we still want you to apply for this loan. It's still structured that maintaining some of your employees is better than none, so you'll still get some of this loan forgiven. So the calculation is going to be pretty proportional. Just, you still have this amount, you're still asking for the same amount. Imagine the same employee, 6 FTEs last year. But then in this year, in July, you submit the documentation to the bank. 2 of your full-time employees, you had to let them go. So now you're only at 3 FTEs. You still have part-time employees, you only have 3. So it's now basically 3 over 6 is 50%, is sort of, your loan forgiveness is going to be 50%. Multiply that times that. So now in July, you're going to get certified from your bank, $31,000 of your debt is gone. $31,000 is still an outstanding loan under these terms that you knew when you applied for the loan, and that will be, clear when the loan is being granted. Depending on when you get the loan, it's going to be 6 months out. So if you get it now, it's going to be September. 1% interest, 18 months when it starts for you to repay it, 2-year term total. So again, generally it's going to be in your interest to apply for these, even if you know that you're going to have to reduce your headcount to some extent, because you're going to be able to just have this money sitting in your checking account, even if you, didn't spend it, but you have these fewer employees, so you're going to owe that. You can just pay it back in July, and without paying any fees on repaying it, half is forgiven, half is can be paid back in July without paying fees. So it is generally, even if you, through forces beyond your control, are going to have to let go of some employees, it's in your interest still to apply to this and do this process with your bank to apply. Okay, so this is pretty crazy because on March 27th, this legislation gets passed. On April 1st, immediately, people who had been following this, were wondering, okay, so when is this money going to be available? And on April 1st, the SBA announced that they would start taking applications on April 3rd through banks. That was, in some ways, its own small disaster. Over a few days, every day, every bank in America was scrambling to put together programs and processes of how they are going to accept these loans, to clarify things that were not clear from the legislation or from the initial Treasury guidelines. So the only thing we can do on April 7th, it's impossible to say what exactly this will look like, let's say on April 20th, but I can tell you what it looks like right now. And then if you're listening to this at some point in the future, hopefully you will be able to go to your bank and get more specific information, or Claire and I are going to work to provide updates throughout this process. But as soon as you've decided you want to apply for a PPP loan, the entity that is going to take that application is a bank. So each bank is going to have somewhat slightly different processes. So I actually want to look at a couple of these just to show anyone who watches this. As of April 7, I'm a small business owner. These are the 4 largest banks in America and originate a ton of SBA 7A loans already. So let's say I work with Chase, because in general, you're going to want to apply through the bank that already has your accounts. It's just going to be a more streamlined process. It's going to be easier for them to review it. In general, if your bank is already participating in this PPP program, you 100% want to apply through them. So Chase has this portal that came live on Friday and has gone down a couple times while they improved it. It's just, this page has shown up, please check back soon, it'll be done soon. But as of right now, while we're recording this, it is open. So you can go ahead and start submitting your application right now if you work with Chase. This is super important. This is what every bank is allowed currently to maintain their own rules on. Chase is not accepting accounts unless you already had a business account before February 15th. So if you didn't have a business checking account, let's say you maybe even just had a personal account, but it wasn't a business account because you're a sole proprietor, Chase is not going to accept your application right now. They have the freedom to accept it in the future, but as of right now, they're not going to let you through this portal unless you have an account with Chase. So if you don't have an account with Chase at all, please look elsewhere. The banks are doing this for 2 reasons. One, they are worried about, every big national bank is worried about being able just to serve their existing customers. That's sort of like who they have to serve first rather than new customers, is the people who have been banking with them forever. And also it's still, frankly, somewhat unclear from the banks how liable they will be if there is fraud in this program, or if these things get, go to the wrong sources. It is Congress's intent to not hold banks accountable if there is, some levels of bad use of these programs. But especially the large national banks are particularly, I think, worried about that still right now, and being careful with lending to their current business customers, because they have so much more documentation already to know who they're lending money to in case they are on the line for it later. This is interesting. We'll just do the others real quick, because Bank of America, they also have an active portal. You can go and apply. They initially were only going to accept loans from people who had business credit borrowing relationships with them. That was their announcement on Friday. That didn't go well for all the people who haven't borrowed money from them but use them for their small business checking. So they have since amended that, and now anybody with a small business checking relationship with Bank of America, again, same stipulation, have to have had it before the 15th. You can go to Bank of America. Citi is the only one that has not yet, at least when I checked an hour ago, had not yet opened their portal, right? So they have all these bankers at Citi who are working right now on this process, but they are not yet able to accept applications. So they're basically, if you bank with Citi, Chase and Bank of America are not going to take your application because you're not a current customer. So Citi is just basically telling you to sit tight until they're ready with this program. any minute now, they might announce that they're ready to start taking these applications. Wells Fargo is particularly weird. I don't want to spend a lot of time on this, but Wells Fargo has limits placed on them based on that scandal that you might have heard of a couple of years ago, where they had a certain small number of bad actor employees making up accounts and originating fake loans. So unfortunately, Wells Fargo opened up their program, like B of A and like Chase, on Friday. On Sunday, they had to shut down their program because they have a limit of how many loans they're allowed to take, they're allowed to make because of that scandal. So they shut down their program. It's pretty crazy. If you're a Wells Fargo customer and you, through no fault of your own, Wells Fargo is under these limits. The federal government is trying to figure out a way to lift this in conjunction with the Federal Reserve Bank, and maybe the FDIC will waive this limit. So this is another one of these things that right now, if you're a Wells Fargo customer, you cannot apply through your bank. But as early as any minute now, they might announce that some agreement has been come to start taking your applications again. This is really important. If you're a Wells Fargo customer, or just if you're not working with a large national bank, like whatever it is, the SBA is working very, very hard to authorize new banks who don't currently do SBA loans to be able to do this. They just released this Find a Lender tool last week, where you can now type in your zip code. We'll do, oh, no, that was not mine. It's a typo, but that'll work. So let's see where we are here. Well, let me do my actual. When you type in an actual, let's say here, Philadelphia zip code, I realize this is not displaying very well on a laptop. So the basic idea here is that there are
And could
lots and
you
lots.
scroll down your home browser really quickly?
Oh, there
It'll
we
make
go.
it a little
It
bit easier.
because of there we go. I see that. It was because of the it's just the webinar thing was being funny. So the SBA has released this tool where you can type in your location and get local banks. These are sometimes going to be national banks and sometimes going to be local banks. But this is like, so here's the Wells Fargo branch showing up in the SBA lender. We know from Wells Fargo's website that Wells Fargo is not going to take that application. All that I want to stress right here is that this tool could be useful to you, but you still might need to contact your bank directly. And we're going to cover a little more of why that's important here. So there is at least this Find a Lender tool. Other lenders might be approved at any minute. So there's a big push with Congress to approve financial technology companies, fintech, sometimes called companies, that are not banks at all, to be able to process these loans. So PayPal keeps coming up, right? Huge business, thousands of employees, very competent at doing things electronically with businesses. Lots of people use PayPal for their business. There's a big push to allow them to process these PPP loans because the banks are all focused on their current customers. So let's open it up for some companies like PayPal to accept people who are not working with any of these banks. And along those lines, if you search probably your local congressperson or senator, there's a reasonable chance that they have been tweeting in the last couple of days about how this program is rolling out, what they're going to do to guarantee that everybody has access to this money, even if that initial 349 rolls out. So a lot of things are still changing there. So I've sort of talked about some of this, but I want to be super explicit on this slide of just like what you should do as a small business owner right now. You can and should, if you haven't talked to a banker already, just use Google and just find out whether your bank is participating, and you might find an answer to that, right? So my younger sister works for a veterinary clinic in Ohio. I was talking to her about this last week. They bank with First National. So I'm just Googling First National Bank Paycheck Protection Plan. Most banks at this point have put things on their websites to help their customers with this information, right? So First National, they opened a program. They say who's eligible. As of Friday, they were open to anybody applying to the PPP through their program. So on Friday, any business owner in America could go and apply to this. Unfortunately, because they got so many applications in the first 48 hours, they had to limit it to, on Sunday, just 2 days ago, they had to limit it for now to people who are currently have an existing relationship with them. So this is not like, their stance is not as aggressive as the big, huge banks like Chase and Bank of America, where, it's a specific type of account. Like basically First National for 2 days was willing to take anybody's application. Now they're still definitely working with their customers, but they are, because they already took applications from anybody, they clearly are signaling that they're open to doing it again in the future once they've gotten their current customers taken care of. So this is really just another way for me to stress that every bank is sort of figuring this out this week, April 7th, and it's important to work with your own bank to figure out where they are in this process, right? So you can just Google your bank, maybe find out if they're participating. Maybe if it's like First National, they have a portal and you can almost like start preparing your paperwork right away. Call your accountant if you have one. If not, you can start preparing your paperwork on your own. But I would encourage you first and foremost to contact whatever bank currently has your business checking accounts, because that is always going to be the easiest person to work with, provided they're accepting these PPP loan applications. I think you got to be aware that they have been incredibly busy working hard to serve their customers. So if you just call up your bank and say, and want to speak to the SBA loan officer, it might be difficult to get them on the phone. Everyone though who I've talked to at every bank in America over the past, who I've been able to get a hold of over the past week, is incredibly helpful, incredibly motivated to help you submit an application, but they are also very, very busy and figuring this out, these internal processes as they create them. Okay, so you're in a situation where your bank is not accepting applications, because that's going to happen. Some banks are just not big enough, prepared enough, ready to take these applications. Your goal is going to be, of course, you can ask if they're considering, working within this framework that the SBA has set up to get approved quickly to start taking them. But I would encourage you to find a different local bank, and the more local, the better, who would be open to taking applications, because there still are many, many community banks that have been doing SBA loans for years and are already up and running with this program, or ones that, as of last week, worked with the SBA to get very quick approval to do it. And I think that your best bet is going to be not large national banks, because we just saw the websites of the 4 biggest national banks. They are going to be overwhelmed with thousands of applications from their existing clients. I really think your best bet is going to be local banks in your community who serve your community already, who are going to be very understanding of the fact that you might have been a Wells Fargo customer and Wells Fargo is not accepting applications because they had some bad actors 5 years ago. So I think that the closer you are to home in the sort of grand tradition of good local community banking, the more likely they're going to be able to help you and take on your application, even though you're not an existing client. And by the way, the politicians are very aware that this is a huge problem. Like, this is not news to anybody who's following this, that politicians are unhappy basically with the banks not taking on new customers, because their constituents have been shut down by this disaster. The politicians have authorized the money, and a bunch of banks are saying we're not going to take applications from anybody except our existing customers, and the politicians are unhappy with that, and they are working as hard as they can to put pressure in different ways on banks and to get it opened up to new banks in order to take those applications. So hopefully you find a bank. I'll have just a little more advice on that in a minute. And then the other thing you can obviously do just as soon as you are done listening to this is start gathering the documentation you can. Anything you have from 2019 and the first couple months of 2020 on your payroll costs, because the banks have the freedom to ask for what they want by bank for these things, but every bank is going to require some pretty significant documentation just to show, tax records, payroll processing, to show, to justify the loan that you're asking for and that will be asking for forgiveness. Clara and I are going to keep providing updates. I'll give you my email at the end of this. You're welcome to email me. Like, there's really nothing better that I can do with my time right now as of April 7th than helping both both our optimized customers and their families and friends. My own family and friends have been involved with this. Like you heard, I was on the phone with my sister helping her veterinary clinic apply for this. So, you know, I'm going to give you my email, and if you can hear these words right now, you are welcome to email me, and I will do everything I can to help you figure out the program and how it applies to you, and you know, help you get some of this money to get us all through this time. I wanted to show just, I don't want to disclose which bank this is from, but this is one of these super helpful banks who was willing to talk to me over the last week. This is what they're asking for when people apply to their bank. They say W3 from 2019, take those numbers, divide by 12, and that can be your loan amount. So if you have that and it's like super easy from 2019, that'll work. You can submit your quarterly payroll forms. You can print out PDFs of your payroll processor if you have one, or you can, you know, start copying. If you're doing payroll in-house and you're writing checks, you can start copying and hopefully putting in PDF form so it's electronic for them. Everything you have from 2019 or through 2020, these forms. They're also asking, and this is not in the legislation, but this seems to be what they're asking, the SBA is asking them for, is your expected 8-week spend upcoming on these things. I think they're just sort of like making sure that these things are not wildly different of what you're asking for based on the calculations, and then what you are planning to spend in the next 8 weeks, and, you know, total all that up, and that's going to be part of the decision. So because I've been following what's happening with all the national banks, and what a mess, frankly, it's been trying to get information from Chase, B of A, Citi, and Wells Fargo, I contacted 2 local banks in my neighborhood here in Port Richmond neighborhood of Philadelphia, because we have 2 banks that are both, you know, very local, real high quality relationship focused banks. So they're both great banks. They both do great services for their customers. But it's sort of like this was never intended as part of the CARES Act, but a function of just how they've been doing business for a while. It has different implications for their customers. So the Washington Savings Bank, not set up as an SBA lender. They just haven't thought that they would get enough SBA applications over the last couple of years that it was worth having someone dedicated to doing that. And as of late last week, they just didn't think it was feasible to do these PPP loans and get set up even through the SBA's new process. So this could change. You know, they could decide any day now that they're going to go all in on this new process through the SBA, and they're going to start taking PPP loans. But as of when I last talked to them, they just weren't ready to do it. So they were one of these unfortunate situations where it's a great bank, but they were just telling their customers, like, we can't take your application right now. Right down the street from them, you see the beautiful Our Lady Help of Christians Church here in Port Richmond. Right down the street from them is the Port Richmond Savings Bank, another amazing bank. Just celebrated their 100-year anniversary. Have this one branch office here in Port Richmond. They do have an SBA loan account set up, and a dedicated professional loan officer who works on other kinds of loans, but is like the SBA knowledgeable lender. He is extremely helpful. He is extremely dedicated to getting every customer these PPP loans as best he can. You know, he's obviously working with the SBA every day as this guidance is coming out, and he's taking applications for his current customers, just like Chase and Bank of America. And he also told me, and I don't mind saying this on the phone because this is an amazing bank doing amazing work for this community. He said other small businesses in the community, Port Richmond Savings is willing to work with them. So if you are based in Omaha, Nebraska, don't call the Port Richmond Savings Bank and you're listening to this, but I would strongly encourage you to uphold the values of this kind of bank and find that bank that is doing that in your community, because almost certainly there is some bank in your town or a couple towns over who is already set up as an SBA lender, because there are tens of thousands of them, and who is ready to, even if they have to process the applications for their current customers like today and tomorrow, maybe Thursday, Friday, next week, they'll be able to start taking their applications, because the window for these loans is not supposed to close until June 30th. Even on June 15th, you're supposed to be allowed to still apply for these. Obviously, most business owners want this money to help them before then, but what we've just faced over the last week is all the banks trying to meet their current customers' need before they go out for other customers. So it sort of encourage you to find these equivalent kinds of banks that serve your community if your bank that you currently have your accounts with is not able to do that for whatever reason. Hopefully it's not Wells Fargo because of the scandal, but if it is, even then, you want to find the equivalent of these great community banks in your area. These were the news stories that were coming out last week when Claire and I were doing our webinars last week. Just day by day, things are changing around banks being afraid of what's going to happen with just how messy it could get with these loans if they're going to run out of money. This is Marco Rubio is on the Senate committee that deals with these loans, so he has been one of the better sources of very, very quick, up-to-date information, just his Twitter account, because he's, cares about small businesses in his state and across the country, and he is trying to, he's providing good information. So this was just this morning, right? Here we are in the afternoon. Just this morning, he says, we are well aware at the government level that $349 billion might not be enough, and everybody across the aisle is super committed to making sure that we put more money into this program as needed so that you, a small business owner, anywhere you are in America, can have access to this money you need to get through this crisis resource, or this crisis period. Okay, so resources. You've seen a couple of these already. This one, early last week, the SBA's website was not that great for helping people, but they are updating it constantly, and now they have a pretty good overview of the different options. So if you just listen to this for an hour, you understand the EIDL, the $10,000 you're going to get very quickly. This link will take you to that much longer application that I also linked to in the presentation. They got a lot of information on the PPP, though if you click here, you're going to find pretty soon they're just going to direct you to a bank, just like I have. So they have this is that same tool I showed earlier. They're just going to describe what I've described here, the major stipulations. And they're going to say, you got to go through a bank in order to get this. So useful website, but the banks are the ones. The Treasury Department has issued these 2 sheets, especially like if you're working with your accountant. The Treasury has sort of been updating banks and accountants and everybody else in America on how these things are going to work as they rolled out. Oh, we didn't look at the PPP form. I think I just forgot to click that link when we were on it. So last Wednesday, I think, the Treasury Department, SBA, put out this form, which is the sort of official borrower application. So you, just as a business owner, can go in here, start filling this out. This is going to be given to the banker who you work with, along with supporting documentation that we talked about of what kind of payroll or forms they want to see. That could vary by bank what they want to see, but this form you're going to submit for everybody. So it's pretty straightforward. It's really, you're just filling in the information about your bank, your average monthly payroll that we talked about, times 2.5, number of employees you expect to have, what you're going to spend it on. These things are all allowed. Just try not to go over 75% for anything but payroll, or try to use 75% for your payroll so you're eligible for forgiveness. They want to know these things. This will be pretty apparent to you as a business owner what the answer to all these questions. They ask for some certifications, the good faith certification, and then this form is going to get submitted to your bank when you're applying for this loan. Okay, this is the EIDL form again, and that's it. So just like to conclude with our closing thoughts, because Clara and I have done a bunch of these and they've changed day to day. Today, April 7th, this is the state of our knowledge and where all the banks are. We will update this. You can email us if you just want to make sure you don't miss an update. Maybe drop either or both of us an email to make sure that we put you on this little distribution list that we have going every time we issue an update. But we're not going to use that to promote our business. We're just using it to try to help everybody as we can. We really hope that you're, first and foremost, you and your families and your friends are all safe during this time. And to the extent that your business has been negatively impacted, we're hopeful that just by getting you some of this information, helping connect you to the right amazing local community bank like the Port Richmond Savings Bank, that you will be able to get access to these funds, keep your business intact, keep your people employed, and that whenever we get through these dark times, we'll all be in better shape because of some of these programs. So thank you, Clara, if you want to just sign off, and then I think we're good to go for today.
Thank you. Yeah, I just wanted to say, first of all, a huge thank you to Nick for all of your hard work on doing this so that we, as people and as a business, can be helpful to others during such a hard time. Again, just want to reiterate what Nick said. Our emails are out there for you. Send this along to anybody who you think may need it, and let us know if you have any questions, because we really, really do want to be a resource, since this is a way that we can be useful right now. So yeah, with that, I will sign off. I think we're going, like Nick said, we'll have some updates soon. So just keep an eye on our LinkedIn page, or like Nick said, we can put you on an email list to get those. And best of luck, stay healthy, and thanks so much.